Welcome to Market Lens. I'm Daniel Reed. Today was one of the most anticipated days of the 2026 earnings season. We had three titans of the AI and Bitcoin trade reporting simultaneously: AMD, Supermicro, and MicroStrategy. The numbers are out and the reactions are dynamic. But to understand why these stocks are moving the way they are, we have to look past the headlines and understand the math of the market. Let's start with AMD. If you looked at AMD in April, you saw a rocket ship. The stock was up over 74% in just 30 days. It was fueled by a massive beat from TSMC and a multi-year partnership to build sovereign AI infrastructure in Europe. Expectations were sky high going into today. And for the most part, AMD delivered a clean beat. The company reported revenue of $10.3 billion, beating the consensus of $9.9 billion. Earnings per share came in at $1.37, well ahead of the $1.30 estimate. In response, the stock is climbing between 4 and 10% in after-hours trading. Now here is what the headlines aren't telling you. Most analysts are still talking about AI demand as one big bucket, but AMD's leadership highlighted a specific structural shift tonight. The growth isn't just coming from companies training models anymore. It's shifting to inferencing and agentic AI. It is carving out the dominant position in the agentic AI era. Next, let's talk about Supermicro, or SMCI. The last month has been a roller coaster for SMCI. The stock has been under a regulatory cloud since March, trading heavily in the high 20s as investors worried about legal headlines. Today's report was a mixed bag at first glance. They beat on earnings, 84 cents against a 63-cent estimate. But they missed on revenue, reporting $10.24 billion against expectations of over $12 billion. Normally, a $2 billion revenue miss would sink a stock. Instead, SMCI is up 20% tonight. Why the disconnect? It comes down to a strategic, mega-scale design win. SMCI is currently building a massive, next-generation GB300 optimized rack platform. This project is so complex that it delayed revenue recognition into next quarter. It wasn't a lack of demand, it was a mix shift. The projects are getting bigger, and the engineering is getting harder. For investors, the 20% rally is a relief that the core business is actually growing faster than the revenue recognition suggests. Finally, we turn to MicroStrategy, recently renamed to Strategy. MSTR is the ultimate proxy for Bitcoin. In April, it rose 33% as Bitcoin reclaimed the $80,000 level. But tonight, the headlines are screaming about a $12.5 billion net loss. Now, if you're a new investor, that number looks like a disaster. But to understand this, you have to understand GAAP. GAAP stands for Generally Accepted Accounting Principles. It's the mandatory rulebook that every public company has to follow. And under the new GAAP rules for 2026, companies must mark to market their Bitcoin every single quarter. This means if Bitcoin's price drops even slightly on the last day of the quarter, MicroStrategy has to report a massive paper loss on their balance sheet, even if they didn't sell a single coin. That $12.5 billion loss? It's a GAAP loss. It's not cash leaving the bank, it's an accounting adjustment. If you want to see the operational truth, you have to look at non-GAAP numbers. When you strip away the Bitcoin accounting noise, the core software business actually grew 12% this quarter. But the most important metric we saw today isn't even in the accounting book. It's the BTC yield. MicroStrategy reported a BTC yield of 9.4%. This is their secret sauce. It proves that by using their stock and debt intelligently, they are increasing the amount of Bitcoin they hold per share. They aren't just holding Bitcoin, they are growing it for their shareholders. The stock is slightly down tonight, about 1%, simply because the massive GAAP loss creates a headline distraction. But for those who understand the math, the engine is running perfectly. 3 reports, 3 different stories. AMD is winning the transition to agentic AI. SMCI is proving that its engineering lead can outrun its legal troubles. And MicroStrategy is proving that GAAP losses can hide a winning strategy. In a market full of noise, the numbers today were clear. The infrastructure for the future is still being built, one block at a time. I'm Daniel Reed. Thanks for watching Market Lens. I will see you next time.